Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Tuesday, March 5th, 2024. Let's take a look at the charts. I'm going to talk this one first, weekly bar chart. We'll start with the big picture, work our way into the day itself. Big gap lower opening on Monday, and we did test this 174.36 channel top on the weekly chart today with a 173.79 low. We actually tested the daily chart version of the same. You can see here at 173.74 today. So the combination of the two, 173.74 and 174.36, which is the weekly version I just showed you, able to contain selling really through March and even through the second quarter. And so there's no certainty about that, but that is the way I see it. These are long-term support levels, and above which it really is I'm going to call it a 1 to 2 month target in the low 190s. 190.83 is a descending two-thirds speed line, and 191.84 is a descending channel top based on the channel bottom, or I'll get to that in a moment. Holding above 173.74 to 174.36 will keep the low 190s in reach. So as we're testing this, and I do know that this is a new low following the December high, that you're buying into weakness. If you don't believe in doing that, I know a lot of traders who don't. They'd rather buy on the higher probability on strength. That is your call, but just know that as this dark hour emerges and we're slipping into the 174, 173 handle, just know that over the next couple of months we could easily be, and I'm going to call it the upper 180s, mid 180s, depending on the timing, because this is dropping. So you could perhaps, as we're testing this area, reach for a 180, 190 strike out of the money calls that don't expire. I would go 3 or 4 months out on that. The most frustrating thing is to be correct on a trade only to see your option premium decay to nothing as you approach your objective. I do think that 182.06 is a likely, I'm going to say 1 to 2 week objective given heightened volatility. It could be a matter of days that we test 182.06. This is a new descending 1/3 speed line you can see in the upper right of the support and resistance. And this is a formation, this is a line study that can contain weekly buying pressures. And from here we could fall back into the low to mid 170s again within a week or two of doing so. Now in terms of the indication for expecting 182.06, that would come with a settlement today above 178.23. So closing above 178.23 would close the gap from the Friday low to the Monday high. That in itself is a sign of stability and strength. And so closing above 178.23, 182.06 becomes a 1 to 3 day objective where we could top out through all of next week, fall away again back into the low to mid 170s. And yes, if we do close above 182.06 over the next week or two, that signals there could be a 2 to 3 week rally into the low 190s where we could top out on a monthly basis, and a settlement above 191.84 would be a significant buy signal event through the second quarter and even into the third. Let's take a look at, once again, 178.23. I have 176.90 today as an intraday pivot point, nothing more than Monday's high. This is the move low so far, so the high of that low has pivot point qualities for the day, pushing through 176.90. I expect the gap to close, then expecting 178.23 intraday, where a daily high can be placed. We could also top out at 178.23 into later week, FYI, talking to 2 to 3 day swing traders really. But once again, closing above 178.23, 2 to 3 day swing trade is then to the upside, expecting 182.06, where we could top out through next week, fall away again back into that 173.74 to 174.36 region within a week or two of testing 182.06. But as I said earlier, I do think that as we are testing this 174.36 to 173.74 region, you can prepare for the low 190s. Once again, that could be buying those out of the money calls I mentioned earlier, or just purely bottom picking Apple in this zone and holding out for the upper 180s, low 190s in the weeks ahead. Or on strength, you could await a settlement above 182.06. This would be the play on strength, in my opinion, that would then clearly indicate the low 190s within 2 to 3 weeks. on strength for the 2 to 3 day swing trader would be a settlement above 178.23, then expecting 182.06. Until then, this is sellable resistance over the 2 to 3 day time horizon. From here, we could fall back into the 173.74 to 174.36 region. 173.74, you've got 174.36 on the weekly chart. You also have 175.31. That is a descending channel bottom on the weekly chart. We've reduced it to a minor point only. But remember, this is a weekly chart. There's a lot of time for the market to recover off of this area and close above both of these. So as I've been saying, this is a significant zone of long-term support. But I will also say that if we close the week below 174.36, and yes, even the day below 173.74, that does indicate, I want to call this 1 to 2 weeks, but really with the heightened volatility and the sell-off that's occurring over the last couple of days, this could be a 3 to 5 day target at 166.85. So I do want to call it on an intra-week basis. I don't think you need to wait for a Friday settlement below that 174.36 level, this weekly chart. I do think you can act on this. At the very least, I think you can act on covering a short position. Covering a long position. If you're bottom picking this area and we, let's say we gap below 173.74, that may be reason enough to exit a long position. Should you go short? In my opinion, a short position can be set if it becomes clear that we will close the day below 173.74, then expecting this 166.85 formation. We also have a steeply descending channel bottom at 167.47, but I'm just showing it for illustration purposes. 166.85 is a significant zone of support on the daily chart as shown here and on the weekly chart at 166.93. So I have these levels as an annual containment. This W formation, or is it an M? It's actually an M, sorry. This M formation, this double top against the intermediate low, the clear classic channel top, bottom rather at 166.93. This is your base of long-term support. And yes, and I know I'm getting way ahead of myself here, but this is kind of the preparation for the possibility of closing below 173.74. Which I'm not expecting. To expect anything of the market, you just act on when it tests key levels. No expectations, and you just act. You either act taking profits, or you act taking losses, or you act entering a position. I mean, it's one of the three. And so you let the market dictate your moves. Right now, the market is offering you a long position in the 173.74 to 174.36 area. And depending on your time horizon, your next action may be either A, taking profits, for instance, at 182.06, or taking profits in the lower 190s. But B is the downside. And the next action, of course, would be, worst case, a settlement below 173.74. And then the action is either A, exiting a long position, or reversing entirely, going short down to 166.85. 166.85, once again, I'll show you on the weekly chart, is 166.93. And on an intra-week basis, I think we can violate 166.93 down into the low 160s, 162.55 to 163.96. But if we close any week below 166.93 by a full 1% margin, so you'd subtract 1.67 from that number, and that will give you, I think, a sell signal through the rest of the year for Apple. I would see this market deteriorating. Probably there is a channel bottom. Take a look at these highs coming across against this low. It'll take you into the 130s, I think. And when I say I think it's just a good high through the rest of the year, am I expecting a full-out unwinding, a bloodbath? No. But what I would anticipate would be the 130s where we could bottom out through the rest of the year. But yeah, that high from December, the January high, I think they're good for the rest of the year if we were to close any week below 166.93. Until then, this is solid bottom picking territory through the year. I hate to keep throwing bottom picking opportunities at you, but we're at one right now, which is entirely legitimate. And, we have another one that is only about 7 points below that at 166.85. So, it's kind of take your pick. Maybe you're watching the show. I do think you can bottom pick if you're not much of a trader who buys weakness, but once in a while you make exceptions. I think your exception could be 166.93 if given the opportunity over the next week, 2 or 3. But I'm not expecting it unless we close below the 173.74 to 174.36 region. I just hit 10 minutes. That is my rule to not go over, so I'm going to leave it at that for Tuesday's Apple Report. Please click like, share, subscribe, and check out wickedstocks.com. Take advantage of that 5-day free trial. I'll be back tomorrow with Wednesday's Apple Report, and you have a great day.